I am going to be investing £1,200 in companies that I know absolutely nothing about. Hi guys, thanks for visiting my channel Free Your Finance. My name's Gary and I'm documenting my journey towards financial independence. I talk about investing, property and savings, so if this sounds like something you may be interested in hearing more about, please click the subscribe button below. For those of you that have watched some of my previous videos, you will know that I'm a huge fan of low-cost index funds. I'm not a big investor in individual stocks, as to be honest with you, I just don't know enough about them to risk my own money. I must add, I do already have some individual stocks in my portfolio, however only of a small value. No large amount of research or knowledge went into these purchases, they were just simply companies that I liked and believed in. Let's face it, it can't be that easy picking stocks, otherwise there'd be millions of people like Warren Buffett. Recently I read a book called The Little Book That Still Beats the Market. I've put a referral link to this book in the description below. The book is wrote by a hedge fund manager known as Joel Greenblatt. He is known as what's commonly called a value investor, and he uses his own formula to work out what he believes are value stocks. He believes that you can use this formula to outperform index funds. According to his testing, this strategy averaged 24% per year between 1988 and 2009. This perks my ears up and of course made me feel a little bit defensive for my precious index funds. As part of his book, he's created a stock screener that supposedly does the legwork for you to find these value stocks based on two key metrics. Number one is looking for companies with a low price to earnings ratio, and number two is looking for companies with a high return on capital. I'm not going to go into detail of what these two metrics mean. Firstly, I don't wish to bore you, and secondly, I think I've probably already proved that I'm not the best qualified person to explain this. What I am going to do, however, is invest £100 of my own money every single month for the next year using this very formula. Please let me make a very quick side note. This is money that I can afford to lose completely. This is just a test, partly to share with you guys here on my YouTube channel. However, of course, investing in individual stocks is very risky, so never invest more money than you can afford to lose. As a big index fund fanboy, I have to admit I'm dubious as to how it's going to perform. Actually, dubious is probably a little kind. I think personally it's going to fail completely. But rather than sitting here doubting it, I'm going to put my money where my mouth is, and hopefully Joel and his book will prove me wrong. First up, some housekeeping rules about the test. Number one, I need to pick the minimum market cap size of the businesses I wish the formula to provide me. I'm going to choose from $300 million, as this will include small cap companies or larger. Number two, it suggests you hold at least 20 stocks, so I'm going to buy 2 a month for 12 months, ultimately holding 24 stocks. Number three, I'm always going to purchase different stocks each month. Number four, the formula is based on me buying the same pound amount of each stock. Number five, I must sell the stocks after owning them for 1 year. Regardless to if they're in profit or loss, this is how the formula works. If I choose to continue with the formula, I will then purchase 2 new stocks that are provided by the updated magic formula screener at that moment in time. If the stock due to be sold is still listed on the screener, it can be kept. Number six, if the stock I buy then drops off the screener within a few weeks, I must still hold the stock for a full year. Number seven, these are US based equities only. Number eight, they recommend you dedicate at least 3 years to this strategy. So let's invest some money. So as I said, I'm going to choose a minimum market cap size of $300 million and leave the number of stocks for it to provide me as 30. I am going to be purchasing my stocks through my Trading 212 account. As you can see at the top of the screen, I've already topped up my £100 into the platform. The other £8.49 that you can see on the screen is from the free stock that I received from being referred to Trading 212. My free stock was Under Armour and they're up 12.3% already. Good going, guys. If you wish to sign up with Trading 212, I've left my referral link in the description below. We'll both get a free share worth up to £100 when you deposit money. The formula states that it does not matter which of these 30 stocks I pick. So for added effect, as I really don't know anything about these companies, I thought I'd use a number generator. So I am going to enter the numbers between 1 and 30, as that's how many my stock screener is going to show me, and hit generate. So it's telling me I need to buy the 6th one in my list. Let's see who that means I'm buying. That means I'm buying this Catalyst Pharmaceutical Incorporated, ticker symbol CPRX. I have never heard of them and I know absolutely nothing about them. So now I'm going to flick over onto my phone and find that company on Trading 212. So the ticker symbol again was CPRX. There they are, Catalyst Pharmaceuticals, and I'm going to buy. I want to buy a value of £50, which is going to get me 13.57 shares. I am pretty scared about this, I don't know why. Hit review order. Looks all good to me. Send buy order. Order executed. So that's the first one purchased. Let's go on and pick number 2 for this month. So let's do that same process again and see who it gives us this time. Number 5. So that is going to be Biogen. BIIB is the ticker symbol. So again, I'm going to head over to my phone onto Trading 212. I'm going to search the ticker symbol, which is BIIB. There they are, Biogen. I'm going to buy £50 worth of value, which gives me 0.2269 shares. Review order. Let's make sure everything's correct. Send my buy order. That one took a while to come through, but it looks like it's all been done. So if we head over to my portfolio, you will now see that I've got both my stocks are purchased, both already at a loss. Not the best news, but obviously we've only just done it. Oh, it's flipped to 0. Let's see what happens. So I know it's very basic, but I've created this simple spreadsheet to help me track which stocks I've purchased, how much for, and most importantly, when I'm due to sell it. I'm going to keep a note of what price I sold for and what my profit and loss was. And of course, I'm going to be reporting back to you with the results. If you'd like to keep track of this test along with me, I'm going to be posting videos every single month, sharing the performance of the stocks that I've already purchased, along with the purchase of the 2 new stocks each month. Make sure you hit the subscribe button if you'd like to be notified when I share more videos. I'm really interested in hearing your opinions on how you think this experience is going to end up. Please leave your comments in the box below. If you've enjoyed today's video, please don't forget to hit the like button. I know it sounds so tiny, but it really helps a small channel like mine grow. If you're watching on YouTube, my face should now be popping up on that left side. Click that, hit subscribe, and hopefully I'll see you really soon. Take care, guys.